In this episode, I'm going to break down what's available right now as of October 2025 for first home buyers in Tasmania, including the stamp duty support, a $10,000 first homeowner grant for eligible new builds and off-the-plan homes, how the first home guarantee scheme applies in Tasmania, including the changes that have occurred from today on October 1st, and the MyHome shared equity scheme option, where you can buy with as little as a 2% deposit. We'll break down who's eligible, what the rules are, and how to think strategically about your options so you can make decisions that support your long-term goals, not just the short-term savings. So let's jump into it. Hello, and welcome to First Home Unlocked, the podcast for unlocking clarity and confidence for first home buyers. I'm Jack Elliott, National First Home Buyer Specialist at Alcove.
And I'm Chris Bates, ex-financial planner and mortgage broker.
Together, we are on a mission to empower you with the keys to unlock your first home. Let's jump in. Hello and welcome back to First Home Unlocked, and today it's another solo episode as we continue our deep dive into the grants and schemes that can help first home buyers get into the market with more confidence and less upfront costs. So in this episode, I'm going to break down what's available right now as of October 2025 for first home buyers in Tasmania, including the stamp duty support, a $10,000 first homeowner grant for eligible new builds and off-the-plan homes, how the first home guarantee scheme applies in Tasmania, including the changes that have occurred from today on October 1st, and the MyHome shared equity scheme option, where you can buy with as little as a 2% deposit. We'll break down who's eligible, what the rules are, and how to think strategically about your options so you can make decisions that support your long-term goals, not just the short-term savings. So let's jump into it. So first, stamp duty is a one-off government tax you pay when you're buying a property. It's calculated as a percentage of the purchase price, so the more expensive the home, the more that you will pay. For most first home buyers, stamp duty is one of the biggest upfront costs outside of your deposit. Now, Tasmania offers a full exemption for eligible first home buyers purchasing an established home under $750,000. You'll need to settle on your property before the 30th of June 2026, and you must meet all the first home buyer eligibility requirements. So they are, you purchase your home in your name, not a company or a trust. You must be 18 years old, be an Australian citizen or a permanent resident, or if there is more than one applicant, at least one of you must meet this criteria. You and your partner have never owned a property in Australia. You haven't previously received the first homeowners grant or concession in any other state, and you intend to live in the home for at least 6 continuous months, starting within the first 12 months following settlement. So this exemption only applies to established homes, not new builds or vacant land. Substantially renovated homes may be considered new if they haven't been occupied or sold since renovations. So this concession applies only to those homes that are clearly established. So this can be a big saving for first home buyers, especially buying established homes in Tasmania. But the right strategy isn't just about the saving upfront. If you're compromising on asset quality just to stay under the cap and you have room in your budget and your borrowing capacity, it's worth stepping back and asking, would a property beyond the $750,000 threshold unlock a better quality home in a better location that suits your life longer? A high quality property could extend your runway, giving you more time and space before needing to upgrade your home. And that might mean avoiding a costly move in a few years and buying something now that's already suited for future life stages like starting a family. Now, we explore asset quality in episode 6, Unlocking Asset Quality, because when your first home grows with you and grows in value, you're helping and setting yourself up with long-term flexibility and equity. And when that property grows in value, that gives you that usable equity, which you can leverage to upgrade your home in the future. You can help find an investment property or simply give you more financial security and flexibility. Now, if the right home happens to be over $750,000 and you're in a position to afford the full stamp duty, that upfront cost could be a smart investment in your future lifestyle and financial security. So let's break it down with some examples. If you purchase for $750,000, you pay no stamp duty as a first home buyer compared to around $29,000 for non-first home buyers. Now at $800,000, so just over the exemption cap, you'll pay the full stamp duty as you're over that cap, which could be around $31,000. Now, if you purchase for $800,000, you would pay the full stamp duty as you are over the cap, which would be around $31,000. Now, there is also a stamp duty concession that isn't specific for first home buyers, but offers a 50% reduction in stamp duty for eligible off-the-plan apartments or units. Tasmania offers a tax-free grant of $10,000 for eligible first home buyers who purchase or build a new home. So to qualify for the first homeowner grant, all applicants must have not owned residential property in Australia before, be buying in your name, not a company or trust, be 18 years or older, be an Australian citizen or permanent resident. Now, if there's more than one applicant, only one of you must meet this requirement. The building must be completed within 24 months of entering into the contract to build or laying the foundations for an owner builder. You must live in the home as your main residence for at least 6 continuous months, starting within 12 months of completion. So your spouse or your partner counts towards this eligibility check, even if they're not applying with you. So the first homeowners grant only applies to new homes, including new builds, off-the-plan purchases, modular, kit or movable buildings, for example, homes that are fixed to the land, not caravans or mobile homes, and substantially renovated homes, only if they haven't been sold or occupied since the renovation. Now, this grant can give you a deposit a boost, but it's only available for new homes. And new doesn't always mean better. Before chasing the $10,000 grant, ask, will this home support your future lifestyle? Is it in a location with strong long-term value? As we explore in episode 6, Unlocking Asset Quality, the best long-term outcomes come from buying a quality asset, not just saving upfront. Now, another incentive available in Tasmania is the First Home Guarantee, a federal government scheme available across all states and territories. It allows eligible first home buyers to buy a home with as little as a 5% deposit and avoid paying lender's mortgage insurance or LMI. And the government doesn't own any part of your property. They basically tell the banks to treat you as if you had a 20% deposit, which is why the banks won't charge you LMI and you still maintain access to the competitive rates. Now, to qualify, the property must fall under the current price caps, which vary by region in Tas. So in the capital city, that price range has increased today from $600,000 to $700,000. And for the rest of the state, the price cap has changed from $450,000 to $550,000. Now, these caps are set by Housing Australia and apply to both new and established homes. With the higher price caps now in place as of October 1st, 2025, more properties across Tasmania are now eligible under the First Home Guarantee Scheme. So this is a great time to revisit your plan, reassess your budget, and explore whether the scheme could help you buy sooner without needing to save a 20% deposit or pay lender's mortgage insurance. Now, to learn more about this scheme, you can listen to episode 10 of the podcast, where we break down how the First Home Guarantee works, eligibility requirements, what guarantee actually means, the pros and cons, and how to remove the guarantee in the future. Or if you're ready to see what these changes can do for your situation, you can book in a chat at firsthomeunlocked.com.au/book, and we'll help you map out that strategy. Now, the final incentive available for first home buyers in Tasmania is the MyHome Shared Equity Scheme, which helps eligible first home buyers enter the market with a smaller deposit by sharing ownership with Homes Tasmania. You contribute as little as a 2% deposit, and the state government contributes up to 40% of the purchase price. You still live in the home as your main residence, and you can buy out the government's share over time. Now, the main benefit of this option is that it reduces your mortgage size and monthly repayments, which can reduce the barriers into home ownership, especially if you're unable to service a better quality asset. But the trade-off is that you give up a share of your property and future equity. You also only have one lender option, which is through Bank of Us, which really limits your options. So the support available does depend on the type of property you're purchasing. For new homes or house and land packages, they'll contribute up to 40% of the purchase price capped at $300,000. Existing homes, up to 30% of the purchase price capped at $150,000, and all properties must fall under the price cap of $750,000. To qualify, you must be at least 18 years old, be an Australian citizen or permanent resident living in Tasmania, have a minimum 2% deposit, and you can use the first homeowner grant towards this. Not own any other real property, past or present. You can own land that you plan to build on using the shared equity scheme. Not have received assistance under Streets Ahead, Home Share or Home Ownership Assistance Program. Not owe any money to Homes Tasmania. Be able to afford the ongoing ownership costs, for example, repayments, legal fees, maintenance. And live in the home as your principal place of residence while you are supported by the scheme. Now, applicants will need to meet both income and financial asset limits unless one of the following applies. You're eligible for the first homeowner grant. You're buying an existing home and eligible for the first home buyer stamp duty concession. You're a Homes Tasmania tenant. If any of these apply, you're exempt from the income and asset test, which we'll go through now. So the income and financial assets must fall below a specific limit. The financial assets cap is currently at $118,238. So this includes cash or savings, lump sum payments, excluding compensation payments, shares, bonds and investments, funds withdrawn from super, and net fixed business assets. Personal belongings and normal household items aren't counted unless they're luxury items. Now, if you're not exempt from income and asset rules, your gross household income must also be below threshold limits, depending on whether you're purchasing an existing home or a new build or house and land package. These limits are based on the number of adults and dependent children in your household. We'll link the income limits in the show notes so you can have a look. So unlike the first home guarantee, where you own 100% of your home, Tasmania's MyHome shared equity scheme means Homes Tasmania co-owns a portion of your home. So you won't pay interest or repayments on their share, but when you sell, refinance or improve the property, you'll need to repay their percentage shared based on the current market value. This means if your home goes up in value, so does the amount you'll owe to buy back their share. For example, if Homes Tasmania contributed 25% and your property increases from $500,000 to $600,000, their share increases from $125,000 to $150,000. While there's limited information available online, we spoke directly with Bank of Us, the only lender currently offering loans under the MyHome shared equity scheme, to help you understand what it's like to live with this arrangement. And here's what we've confirmed so far. You must exit the scheme within 30 years. You'll need to buy out Homes Tasmania's share of the property within that 30 years, either by refinancing and paying the full share in a lump sum, or selling the property with Homes Tasmania receiving their proportional share of the sale price. Now, unlike some other schemes, you can't gradually pay down the government share over time. It must be done in full, either via a refinance where you're in a position to take over the full ownership, or by selling the home. Now, you can't refinance or use any equity from your home until you're ready to completely buy out Home Tasmania's portion. Now, if you're planning structural renovations, you'll need to get approval first. This is because the government is a co-owner of the home and their stake may be affected by significant changes. We're still waiting on confirmation from Bank of Us about renting out a room while still meeting the live-in requirements, and what happens if you receive a financial windfall such as inheritance or lotto winnings, and whether that triggers a requirement to repay the government share early as it does in some other states. Once we have clear answers, we'll update the downloadable resource linked in the show notes. Now, we don't usually recommend a shared equity schemes as the first option. While it can reduce the upfront costs and help you with affordability, shared ownership means shared control. And long term, this can mean that you can't use equity for future investments or upgrades until you've repaid the government share. And you can't refinance and you're locked into one lender, so there's no option to find a better rate until you've paid back the government share. Now, if you're considering shared equity as an option, go and listen to episode 11 of the podcast for our full breakdown on shared equity across Australia, including the trade-offs, exit options, and who it may best suit. Also consider alternatives that let you keep full ownership, especially if you're buying a high-quality home with long-term growth potential. The first home guarantee scheme is a great alternative given the low deposit required. And we'd encourage you to speak with us first to see whether there's a way to structure your purchase that avoids giving up part of your equity. So if you're a first home buyer in Tasmania, here's what support could be available for you right now. A full exemption on stamp duty for established homes under $750,000. $10,000 first homeowner grant for eligible new builds. First home guarantee where you can buy with a 5% deposit and pay no lender's mortgage insurance. And the MyHome shared equity scheme. But as always, the best results come when these supports fit into a clear, well thought out strategy, not when they become the driver of the decision. Start with your life plan, your ideal location, and your long-term financial goals. Then explore which initiatives align with that, not the other way around. You'll find all the links to the relevant resources in our show notes. And if you are ready to take the next step in buying your first home, book a get to know you chat at firsthomeunlocked.com.au/book, and we'll help you out to build a plan that works for you and your goals. And don't forget to follow the podcast. We've got some more state breakdowns coming soon. Thank you so much for listening. I'll see you on the next episode. Thank you so much for listening. We'd really appreciate if you could do us a huge favour. Share this episode with any first home buyers that you know so we can help more people like you feel clear, calm and confident when purchasing their first property. You can join our Facebook group, First Home Unlocked, to continue the conversation with other first home buyers. Or if you're ready to unlock your first home, you can book a get to know you chat by using the link in the show notes or by going to firsthomeunlocked.com.au. Before we go, just a reminder that everything we share on this podcast is general in nature and not tailored to your personal situation. We always recommend seeking advice from a qualified and experienced professional when making financial decisions.